annum DEP, depreciation charge per annum, we now say the 600 divided by the useful life. Now the 600 divided by the useful life. So now it will give us 3 into here. It will give us what? 200. 200 euros. So this is the annum depreciation charge. Now this 200 here. Now let's look for the accumulated DEP. So the accumulated DEP. So let's say the asset was used for just 2 years. The asset was used for 2 years. So we now say 2 years of it multiplied by the 200. Which will in turn give us. Now we are calculating our accumulated. So now our accumulated depreciation here is 400. 2 years by this 200 is what? 400. Now we look for the net book value, which is the current figure. The net book value. Now we now say 600 less 400 is what? 456 200. 200. This is the NBV, the net book value or the carrying value, which is 200. Now let's say the asset was sold at let's say it was sold at 300. Let's say 300. So now you now less the 300. 200 less from 300. So now the profit is 100 euros. This is the profit. Now, profit on PPE, IAS 16, property, plant, and equipment. Now, why the other comprehensive income are income that are imaginable? Now, let's say the assets was bought with the company bought the asset at what? 600. Now, this 600 now, and the useful life of the asset is 3 years. So now you divide in order to have the annum depreciation charge, which is 200. Dividing 613 is what? 200. Now this 200 now, you check your accumulated depreciation. By what? Let's say the asset was used for 2 years. Now the 2 years multiplied by this 200 will give you 400. Now you automatically look for the net book value or the carrying value of the asset. Now let's say now so what you the cost at which you bought the asset less less the accumulated depreciation, less it from the cost at which you bought the asset. Now you arrive at 200, and the 200 is known as the net book value or the carrying value. So now let's say you sold the asset as 300. So now 300 less 200, you have a profit of what? 100. You have a profit of 100, and that particular profit is imaginable, and that is one of the sample for other comprehensive income. Now let's have a clear view. Let's have a clear view. Let's have a clear view. So this is the clear view of it. So now we proceed. So now we proceed. So now we say profit or loss on sale of property. We say profit or loss on sale of what? PPE. So now it will now be like this. You know, when it is loss, you deduct. When it is a profit, you what? you add. So now we also have gain or loss on revaluation. Revaluation of what? Property. When it is gain, we add. When it is loss, we what? We deduct. Now, what next? We think about deferred tax. If there is a deferred tax, and if there is a deferred tax, you put it. But that is, I guess, is optional. Now, so now we add. Now this is called total comprehensive income. Total comprehensive income. This is now total comprehensive income. And this is the highly summarized statement of profit or loss and other comprehensive income. Now, this is a highly summarized statement. And for all those who sent me messages upon people that want to know how a highly summarized financial statement will be looked at, or how it will be treated, or how it will be. Now, look at it here. A highly summarized financial statement. And guess we spoke about in our very first video, we spoke about the users of financial information. Now, statement like this, an investor will take a look at it in order to know whether the company is financially healthy, so that the investor will tend to invest his or her money there. The supplier will also take a look at this financial statement to know whether the company will be able to pay back the goods supplied. The very statement of profit and loss, the government look at it, managers, employees, they all view it for different purposes. Whether the company can pay salaries, whether the company will be able to pay tax and tax regulations, whether they will be able to pay back the goods supplied, and so on and so forth. So this is the highly summarized financial statement. Now, in our next video, we'll be looking at statement of changes in equity. Yes, we'll be looking at statement of changes in equity. Now, if you are new here, please don't forget to like, subscribe, and share. Please, you can drop your questions in the comment section. I will be there to guide you. Once again, welcome to another section of Suarez Accountancy Hub. Now let's take a close view of the financial statement, which is statement of, let's take a close view of the statement. Now we can see revenue. After revenue, cost of sales, cost of sales, gross profit, other income. Look for admin expenses, selling, arrive at operating profit. You look for like interest expenses deduction, net profit, tax expense, net profit after tax, and so on and so forth. So this is a highly summarized statement of profit or loss and other comprehensive income. Please don't forget to subscribe,